Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo again to talk about what stocks you should be looking at for the second half of 2025. It's been a wild ride so far in the first half, but we are busting out to new all-time highs on the NASDAQ 100 and the S&P 500. So what should you be looking at? Well, it's all about growth. The growth names have really rebounded off of their Liberation Day sell-off. They are red hot, and I brought three of them for you this week to take a closer look at. I'm going to be sharing the charts on our YouTube, on the video part of the podcast, but also talking about the fundamentals for these three stocks. Where do these go from here? I'm thinking they're going higher. That's why I'm talking about them this week. But these are hot growth stocks. As much as I love value, growth is where it's at in the second half of the year. Now, hopefully, rising tides will lift all boats, and we will also get a lot of hotness on the value side. But for now, the growth names are the ones that are really running. The bulls are charging on that side, and these are three of the hottest going into the second half of the year. They're already breaking out to new highs, but given this momentum, I'm still liking them as a second half play. So what are they? Well, we know the names, and they are already owned by many of you, but some of you may not be in some of these yet. The first one, Palo Alto Networks on the cybersecurity side. Second one, Palantir on the defense and AI side of things. And then we have Broadcom also on the AI side, on the semiconductors, all three breaking out. But let's take a look at the charts, because this kind of illustrates where we stand on a lot of the growth names right now here in 2025 and how much momentum they really do have. So I wanted to take a look at various time periods here, and I'm using Zacks.com interactive charts. I also put the VOO over here. VOO is the S&P 500 ETF from Vanguard. So that is one many of you own. It's just easy to use to designate the S&P 500. So that's on this chart too. All three stocks and the VOO on here. I know it looks a little bit all busy here on the 1 month chart, but what you have to really see is that all three stocks are outperforming the S&P 500 in the last month. S&P 500 up 4.56%. Then the winner in the last month is a surprise. I'm sure many of you thought it would be Palantir, but that's up about 8%. Palo Alto Networks up a little over 7%, and then Broadcom up 14.5% in just the last month. Now, what does this look like year to date? Well, let's look at the 3 month. Why not? That'll include some of the Liberation Day craziness, and we get a clearer picture here on what's really going on with these big cap growth names. The S&P 500 up 12.2% in the last 3 months. And then the winner, surprise, still is Broadcom in the last 3 months, just barely up about 71%. Yes, 3 month time period, 71%. Palantir up 69. These are red hot. I wasn't kidding when I said I was bringing you the red hot stocks. But even Palo Alto Networks, which has kind of been a little quieter, is up 22.7 in the 3 month stack. Now let's look at year to date. So this is going to include all of the weakness to start the year. And this is when Palantir really takes the crown, because it started the year pretty strong and then has been soaring. So Palantir up 84.4 for the year. Broadcom number 2 at 19. Palo Alto Networks up 12.7. And then you have the S&P 500 up 5.5. So that sell-off really took a lot out of the S&P. And even though it's rallied big in the last 3 months, it's still just trying to get, back to the beginning of the year. And now it too is breaking out to new highs, but over that period, not quite as good of performance. Now, what about the 1 year? If we go back to red hot 2024, this is a kind of a crazy chart as well. For a 1 year chart, Palantir up 435%, Broadcom up 68.4. Then you have Palo Alto Networks up 19.5, and then S&P 500 up a little over 13%, 13.1%. Now, I never thought I'd say 19.5% in a single year looks kind of bad, but when you're looking at this chart, it does feel a little bit low, right? Even though that is incredible. And if you can get 19% every year for several years in a row, the compounding effect of that is just tremendous on your investments. Obviously, if you can get anything better than that, even better. But nothing shameful about 19.5% with Palo Alto Networks. And then I wanted to look at the 5 year, because we do have the new all-time highs in the S&P 500. It is up 97.6% in that 5 year stack now. And this is a little bit past when the start of COVID really slammed down the stock market. So that is being wiped out now. And we're capturing a lot more of the rally that happened in 2020 with the S&P 500. But even with the other stocks, we are now also capturing going beyond those sell-offs at the start of COVID. And now we're still in the phase where we're getting a lot of the COVID rally in here. But Palantir still the leader over the 5 year stack, 1,406% for Palantir. But Broadcom, look at Broadcom, 775%. This is a 5 year chart. Palo Alto Networks, 430%. And then again, S&P 500 at 97.7%. So not too shabby to double your money in 5 years with the S&P 500. That's an outstanding performance from that major index. But all of these others, you're at least a 4-bagger. You have almost an 8-bagger in Broadcom. And then you have well over a 10-bagger in Palantir now. So let's take a look at some of the fundamentals, as we always do. We're getting growth. We're not getting any value with any of these, but growth has been where it's been at for the last 5 years, as we've just saw in the charts. And so that's where we want to be in the second half of the year. The growth stocks are in charge and they are rallying. So Palantir, ticker PLTR. It's number 3 right now. As you can see, I brought up the quote page. It has an F for value, an A for growth, a C for momentum, even though the stock is trading near its all-time highs, but a C for VGM score. It is very bullish on the earnings side. Let's scroll down and look at this little chart down here, that's sales and EPS growth rates. So 2023 outstanding earnings growth, 316%, 2024, 64%. Look at 2025, 41% earnings growth after growing earnings 64 last year. And then 2026, another 24%. These are incredible numbers from a large cap company with $308 billion market cap to be growing at this pace year over year over year. On the sales side, that's also picked up. 2024, 28.8% sales growth. 2025, expecting 36.7%. And then 2026, 28.2%. So that's very, very strong. Again, for a company of this size to do it year over year, you are just seeing tremendous double-digit growth there. Let's look at the price and consensus without those earnings surprise. It is one of my favorite charts. Look how good it looks up and to the right. That's reflecting that earnings growth, but the analysts are very bullish. It's still going up there. And you can see 2027 now on the chart as well. And we're seeing a similar earnings growth trajectory for 2027. So, what's not to like about Palantir? Well, if you are concerned about valuations, then this one is a concern. It might not be for you if you are concerned about valuations. So, forward PE now is 224. Nobody's cared about its PE. It is growing those earnings, but we still are at 224. PEG ratio, that's the earnings plus growth. Usually you see it not too bad if you're seeing this kind of earnings growth, but with that high of a PE, it's still very high on the PEG ratio. It's at 7. So that's very high. Remember, a 1 PEG of 1 means you, or under 1 means you have both growth and value. Nobody was expecting that, but I was thinking maybe it would be 2, 3 times, maybe 4 times, but 7 times is very expensive on the PEG ratio. So people are willing to buy these earnings and this revenue at this level, and for now, they are willing to pay up for it, but it is a high price. I took a look at price to sales ratio, as we should with every kind of growth stock, especially in technology. Remember, price to sales ratio over 10 usually indicates it's fairly stretched on the valuations. And it was price to sales ratios over 10 that got people a little nervous in the dot-com boom era. And when Microsoft and Cisco and some of the big cap tech names started trading over 10 times on price to sales. But that looks all kind of quaint now in 2025 because Palantir's price to sales ratio is at 99. And just for some comparison with some other companies that people had a little bit of concerns about valuations with starting late last year as they continue to rally, and I'm talking about Microsoft and Nvidia. Even those stocks kind of took a timeout for a little while on valuation concerns. Microsoft trading with a price to sales ratio right now in 2025, although it too is breaking out to new highs of 13.7. So it's still hovering well above really the 10 times level. And Nvidia has come down a little bit, but still pricey, not as pricey as Palantir at 25.9 times. So these are looking actually kind of like a bargain compared to what Palantir is. Nvidia and Microsoft stocks also busting out to new highs. Maybe we should take a look at those just real quick. I own Microsoft in my own personal portfolio, and I've been a long-term holder of it. But Microsoft, here's its price and consensus. It's looking pretty good too, up and to the right, but the analysts haven't really been changing any of these earnings estimates. But it is showing quite a bit of earnings growth there for Microsoft, and you can see the breakout there on the 5-year chart of the shares. 2027 looking really bullish here with some nice, probably looks like double-digit earnings growth gains there. And then let's take a look at Nvidia really quick because we really just can't escape it in the second half of this year. I know many of you own it. That's why I didn't really want to include it as one of the 3 to be buying for the second half. But we are taking a quick look at it here and up and to the right, again with Nvidia earnings. And you can see 2027 also looking bullish. You can see the breakout there. It's been in this kind of narrow trading range since about mid 2024. So it has taken over the last year for it to really, really bust out here. But valuations not looking as pricey with an Nvidia. Like I said, price to sales is at 25.9, but it has a PEG ratio of just 1.3. Microsoft's PEG ratio, 2.5. So Nvidia, almost a value on its PEG ratio. And Microsoft, not super pricey, but not really a bargain here either at 2.5. But Palantir, PEG of 7. So pretty pricey there with Palantir. So that's Palantir, Nvidia, and Microsoft. Just taking a quick look at all of those red hot names. And I think the breakout kind of is telling us the story here. So switching to the next stock, Palo Alto Networks, PANW is the ticker. It also is a number 3. We're heading into earnings season, so I'm expecting these all to just kind of be holds here because not a lot is going on with the changes to the earnings estimates ahead of the earnings season yet. But this also has an F for value, a C for growth, a B for momentum, and a D overall on the style scores. It also large cap, Palo Alto Networks, 133 billion on the cybersecurity side. And look at the price consensus and surprise chart. Wow, it's got a lot of green. It has not missed in 5 years. That's a great earnings surprise track record. And then we do have up and to the right as expected. We're paying for this growth and we want to get the growth. And even 2027 looking very bullish here. Now, scrolling down and looking at the sales and EPS growth rate box that's down here in the middle part, we see 2023 earnings up 76%, 2024, 27.9. Now, 2025, it is slowing down because, as I mentioned with Palantir, it's really difficult to grow at these really extended double-digit rates year after year after year after year. Something really magical has to be going on in the background to do this with a large cap company like this. But we're still seeing very solid double-digit earnings growth, even as it cools. So we're going to see 15.1% in 2025, 11.6% expected for 2026. Still impressive. Then on the sales side, double digits across the board. 2023 was at 25.3, 2024 16.5, a little bit of cooling, 2025 at 14.4, and 2026 at 13.9. What about valuations with Palo Alto Networks? 61 times earnings. So that seems almost cheap compared to Palantir. And then PEG ratio of 3. So kind of in the middle, but not real cheap. Not as crazy as Palantir at 7. Price to sales ratio of 15. So that's a little more doable than what we saw with Palantir and not quite as pricey as NVIDIA there at 25.9. So I feel like with a lot of these big growth tech names, we are going to be paying over 10 on the price to sales ratio, given the rallies and given even with the earnings and the sales increases, you are just going to be paying up for the sales with these stocks. But hopefully you can get them between 10 and 20 where there might still be some more upside, or you're buying a stock like Palantir where nobody really cares about any of the fundamentals and they're buying it regardless. And that is what we're seeing on that stock right now. The momentum is great. Let's look at the price of consensus again, just on this stock as a standalone, price of consensus on Palo Alto Networks. And again, these are the charts you want when you're looking at the price of consensus. It's just up and to the right and looking really, really solid. Now, for those of you who are watching this podcast, if you want a comparison on what you don't want on the price to consensus, it would be something like an ExxonMobil. See this? Down and to the right. Although 2027, it might be some relief up here at 2027, but not looking good for this year or next year. And those earnings are just being slashed. Or you could look at one of the home builders. They're not looking so hot on earnings either. Lennar, it's a number 5. And this is why, down and to the right, even 2027 now being cut pretty drastically after their recent earnings report. So analysts are not bullish whatsoever on earnings for the home builders for the rest of this year and next year, and even maybe the year after that. Brutal, but earnings estimates change and can change daily. Every quarter, they're going to be adjusting. So it's far into the future to be looking at 2027. So things can change. I mean, look at 23 here. It was down, and then it went up when things weren't quite as bad as they thought earlier. So, but this is what you don't want to see. That's why when I put up something like Palo Alto Networks and I'm kind of gushing over this price and consensus chart, look at that. I'm gushing again up and to the right. This very solid earnings growth, very consistent. And this is what you want in a stock, any stock, growth or value or otherwise. But we definitely want to be in areas like this with the stock market breaking out in the growth names where the earnings are also doing this kind of growth. So that's Palo Alto Networks, PANW is that ticker. And then we are going to wrap it up with Broadcom, ticker AVGO. I almost call it Avago every once in a while, but it is Broadcom now. It's number 3, as I thought it would be. All of these stocks are mostly 3s as we're waiting for the next earnings to come in. And D for value. So it's not quite as expensive maybe as the others, because the others were Fs. B for growth, but this one is an F for momentum, even though it's breaking out. So I sometimes can't figure out the momentum style score, like what it's actually looking at when it's trying to pick it. It's all these different factors in the background of each of these style scores, and then it collects them all to give out the score. So something is not good on the momentum for actually each of these have not been that great on momentum. But we end up with a D for the VGM. But we don't care because the stock is at new all-time highs. Here's the price consensus and surprise chart, again, up and to the right. Looking a little more aggressive for 2026 here. So the analysts were a little more pessimistic back here in 24 about 26, but now they're getting more bullish. 2027 has started. It's weakened a little bit here. But again, that is well into the future. This is one of the $1 trillion market cap companies, market cap of 1.266 trillion. And let's look at the sales and earnings growth, because if it's hard to grow at the double digits when you're just like 300 billion, it's got to be hard when you're 1.3 trillion. But maybe not, because look at this with Broadcom. I'm stuck on the old name. 2024 earnings up 15.4%. But look at 2025, 36.1 expected. That's where we see the little boost in some of these numbers. And then 2026, another 24.6. So these are big time boosts here for this year and next year. And sales looking pretty good too. Sales growth of 44% for 2024, expected 21.6 for 25, and then 20% for 26. This is the AI play. Just like with NVIDIA on the semiconductors, AI is now a bigger portion of what their business is. So we're seeing these really nice numbers. Now, what about valuation for Broadcom? It's trading at a PE of 40.6, and it has a PEG ratio of just 1.6. So that's not too bad. That's looking more like an NVIDIA on the PEG side. It's on the lower end and getting closer to that value area. Price to sales ratio, little elevated, but closer to NVIDIA. So that would be its peer, 22.2 times for price to sales with Broadcom. So there's a lot of fear of missing out on these stocks right now, right? But that's also why I'm picking them for some stocks to buy in the second half here, because once you get momentum, it usually begets more momentum. And we do have the fundamentals with all 3 of these stocks, even including the 2 I didn't mean to even portray here, Microsoft and NVIDIA. But keeping it on these 3 red hot stocks, they're breaking out, but they've got double-digit earnings and sales growth expected, not just this year, but next year and even beyond. Little early to say, but we like all of these factors, and that's what we want when the bulls are charging. We want to get these red hot stocks We do want to be in them. I know many of you aren't in many of these names, but if you own the S&P 500, you are, and that's why you're getting the breakout in the S&P right now, because these big cap tech stocks are leading the way with their new breakouts as well. Now, there was some pattern to these stocks that I just picked out. They are all technology. They are AI plays or cybersecurity, which remains really red hot as well. We all need cybersecurity right now, right? So those are the areas where the growth is. The spending also is. The top tech names minus Tesla are expected to spend about $500 billion this year on rolling out all the AI type of plays. And that doesn't even include some of these smaller companies like a Palo Alto Networks on the AI side of things, or other software companies aren't included in the Mag 7 like ServiceNow and Salesforce and things. So keep these in mind when you're looking at all these charts. Be sure to consult the price and consensus chart if you're going for these growth names, because if you get all giddy looking at that chart, those are the stocks you want to own when this growth bull is charging. But as I remind all value investors as well, when the growth charges and gets red hot, it usually lifts a lot of boats, and there will be some value stocks that get lifted as well in this second half of the year. So also remember, trees don't grow to the sky, and neither do stocks. These are all breaking out right now here at the end of June 2025, but there will be pullbacks. There will be 5% pullbacks, maybe even a 10% through the second half of the year. We don't know. There always is. And so you will get further opportunities to get into some of these names, perhaps at a little bit better price. So fear of missing out is real, but remember, there are always pullbacks and sell-offs. That is normal. We want there to be. But for now, things are looking up for the second half of the year. I am bullish, and I'm the value stock strategist, and even I'm bullish on these growth stocks. So be sure to keep these on your watch list. Let me recap the stocks I talked about again. So we had Palo Alto Networks, ticker PANW. We had Palantir, ticker PLTR. We had Broadcom, ticker AV, as in Victor, GO. A as in Adam, V, GO. Then I mentioned Microsoft, MSFT, and NVIDIA, NVDA. So we'll include them here. And I only own Microsoft out of this group in my own portfolios, and I don't own any of them in my Zacks portfolios, but several of them are in other Zack editors' portfolios, as they should be, because growth is hot. And I run the Value Investor and the Insider Trader. We did own Broadcom until just a couple of months ago, actually, in the Insider Trader, but that was from 2023, an insider buying there. So I keep my eyes peeled to see if any insiders are thinking, hey, we have more upside too on any of these names, because I'm in them for sure if I start to see the insiders buying in some of these. So keep the insiders on speed dial there too. And otherwise, keep them on your watch list, and we'll see how it all plays out in the second half of 2025. As always, you can get all of our video podcasts on YouTube. Be sure to subscribe there. You can get the audio versions on Apple, Spotify, SoundCloud. We're on Amazon Music. We're on just about anywhere you can get podcasts. But be sure to get us somewhere, and I'll see you again next week with some more stocks.